Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Now, let's explore some top ETFs and tips for smart investing in agriculture. Governments and climate shifts add another layer of uncertainty. Policy changes. A new biofuel mandate could suddenly ramp up demand for corn, while tariffs on imported soybeans might crush prices for U.S. farmers. Climate pressures. Longer droughts or unpredictable growing seasons make it harder to forecast crop yields and ETF performance. Sustainability rules. Stricter emission standards for fertilizers or methane limits for cattle farms could hike production costs, squeezing agribusiness ETFs. Unlike tech or healthcare stocks, agriculture is at the mercy of both lawmakers and the environment. A fund like DBA might look stable until a new regulation reshapes an entire commodity market. Risk isn't bad, it's just part of the game. But with agriculture ETFs, you're betting on factors beyond corporate earnings or consumer demand. You're betting on rain. How to choose the right agriculture ETF. Picking the best agriculture ETF isn't just about going with the biggest name. You need to dig into the details to find a fund that matches your goals. Whether you want broad commodity exposure or a stake in agribusiness stocks, these three factors will help narrow your options. Assessing expense ratios and fees. Expense ratios eat into your returns over time, especially with commodity ETFs that deal with futures contracts. A fund charging 0.75% might seem small, but compare that to one at 0.35%, and the difference adds up. Here's why fees matter: long-term impact. A 1% fee on a $10,000 investment over 20 years could cost you over $3,000 in lost growth, performance drag. Agriculture ETFs often underperform their benchmarks due to rolling futures costs. High fees make that worse. Stick with low-cost options like DBA, 0.93%, or MU, 0.51%, unless a pricier fund offers unique exposure you can't get elsewhere. Liquidity and trading volume. A lightly traded ETF can be a headache to buy or sell. You don't want to get stuck with wide bid-ask spreads or delayed executions. Look for these signs of good liquidity. Average daily volume. At least 100,000 shares traded daily. DBA, for example, trades over 1 million shares most days. Tight spreads. The difference between buy and sell prices should be minimal, e.g., 1 cent 5 cents per share. High liquidity means you can enter or exit positions quickly without losing money to slippage. Understanding the underlying assets. Not all agriculture ETFs are built the same. Some track soft commodities like coffee and sugar, while others focus on grains or livestock. Agribusiness ETFs add another layer, holding stocks in fertilizer companies or equipment makers. Before investing, ask, does this match my strategy? If you want inflation protection, a futures-based ETF like DBA makes sense. For growth, MU's corporate holdings might be better. What's in the mix? A livestock-heavy fund, e.g., cow, behaves differently than one weighted toward soybeans and wheat. Check the ETF's fact sheet to see its top holdings and sector breakdown. Surprises here can lead to unexpected volatility. The right ETF balances cost, tradability, and exposure. Ignore one, and you might regret it later. Future trends in agriculture ETFs. Agriculture ETFs aren't just about tracking crop prices anymore. The sector is shifting as sustainable practices and high-tech farming reshape how food is grown and traded. Investors who ignore these trends risk missing out on the next wave of growth. The rise of sustainable agriculture. Sustainability is no longer a buzzword, it's a driving force in agriculture investing. Funds are increasingly adding companies and commodities tied to eco-friendly farming, recognizing that long-term profits depend on healthy soil, water, and supply chains. Key developments shaping these ETFs. Regenerative agriculture. Methods like no-till farming and crop rotation boost yields while cutting carbon emissions. ETFs are starting to weigh these practices when selecting holdings. Plant-based demand. As alternatives to meat and dairy gain traction, funds are adjusting exposure to soy, almonds, and oats, key ingredients and substitutes. Carbon credits. Some ETFs now include farmland operators earning credits for carbon sequestration, adding a new revenue stream beyond crops. Look for funds adjusting their strategies to favor low-water crops, organic producers, or grain suppliers with verified sustainability programs. The ones that could outperform as climate policies tighten. Technological innovations in farming. From drones monitoring fields to AI predicting harvests, tech is transforming agriculture, and the ETFs tracking it. These advancements boost efficiency, which can mean higher profits for agribusinesses and more stable commodity supplies. 3 areas to watch. Precision agriculture. Sensors and GPS-guided equipment optimize planting and fertilizing, reducing waste. ETFs holding companies like Deere, a leader in smart tractors, stand to benefit. Vertical farming. Indoor, stacked crops use less land and water. While still niche, some agribusiness ETFs are adding vertical farm operators as they scale up. Gene-edited crops. Faster growing, drought-resistant seeds could stabilize yields amid climate change. ETFs with exposure to biotech ag firms may see less volatility. ETFs slow to adapt might miss shifts like lab-grown meat disrupting livestock markets or automated greenhouses lowering vegetable costs. The funds winning long-term will be those betting on tech that makes farming cheaper and more reliable. Agriculture ETFs like DBA and MU offer a smart way to invest in farming without buying physical commodities. They provide diversification, inflation protection, and exposure to global food demand. But they also come with risks. Weather shocks, price swings, and policy changes can shake up returns. If you're okay with volatility and want to hedge against inflation, these ETFs could fit your portfolio. Just keep fees low, check liquidity, and understand what's really inside the fund. Think long-term. The world will always need food, but how it's grown and traded is changing. Whether you bet on crops, agribusinesses, or new farming tech, choose a fund that aligns with your goals. Ready to get started? Dive into the prospectus, watch the trends, and don't forget to review performance regularly. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.